Morning, everybody. Here's another video. This time, we're just going to talk about one of the uh, pieces that go with capital assets, which is a trade-in. Because I thought maybe when I went through it, I thought it might be a little bit confusing where the numbers come from, what happens. So I was going to walk through one example with you guys and see where we get to. Okay, so look, we have company EDRAT, and they've decided to trade an old piece of equipment for a new one. Okay, something that happens quite often. We do that when we're with cars. Okay, companies do that with equipment. So the old piece of equipment had an historical cost of $20,000, which is what's sitting in their ledger account, and an accumulated amortization of $18,000. Again, what's sitting in their general ledger accounts. The price of the new equipment is 30 grand. The old equipment, the stuff we're trading in, has a trade-in value of $1,000. So you go to the dealer and you say, "Look, I've got this old piece of equipment I can give in for this new piece of equipment. How much are you going to give me for it?" And they say, "Well, we'll give you $1,000 as a trade-in." And the fair market value of it is $850. So actually, you're kind of gaining on this deal just a tiny bit. Okay, now look, I found the best way to deal with this is to sort of build the transaction bit by bit. So it's going to look a little strange. You're going to do debits and credits, and then come back to the debits, and then go back to the credits. But eventually, the whole thing will just sort of fit together like a puzzle piece. Okay. So look, here we know this for sure. The accumulated amortization of the old equipment and the equipment account itself, old equipment. The accumulated amortization is going to get debited for the $18,000. And the equipment, the old equipment, that account has to get credited, pardon me, for $20,000. Okay, what this does essentially is it just gets rid of those accounts. There are zero balances now. They don't have any bearing or factor in this whatsoever. Actually, let me just quickly see if I can't move this just a tiny bit. Ooh, get down there. And there we go. Okay, perfect. Okay, just to give myself a little more space. Let me do it again here, actually, with this guy here. There we go. All right, so that's what we have to do in that case, okay? Just zero balances as accounts on, and that makes sense, right? Because we're getting rid of this thing. So what I want to work with now is what I actually paid for the new piece of equipment. Well, it's a list price of 30 grand, but we have a trade-in of $1,000. So we're only going to pay the list price minus the trade-in value, which is $29,000. All right. Now what we have to do is we have to put the new equipment onto our books. We have to give it that amount. Well, how much do we pay for it? Well, we paid the 29 grand sitting right here. Okay, that's what we paid for it. However, we have a fair market value of $850 of the old equipment. So that gets factored into the value of the new equipment. So I'm just going to change my pen color for here for a quick second. Value, new equipment equals price paid plus FMV, or the fair market value of old equipment. Okay, so the price paid is right here. Okay, we paid 29,000 for it, and the fair market value is sitting right here. Okay, that's the 850. That will give us $29,850 for all the math geniuses out there. All right, so that being the case, that means that I have to debit the new equipment for $29,850, which is what I paid for it, plus the fair market value of the old item. Okay, as you can see, it's not going to balance out just yet because we actually, depending on what the transaction works out to, we may either have a gain or a loss. In this case, we have a loss, and we call it a loss on disposal. All right, so we're spending a little bit more on disposing of this asset than we really want to, so we're going to have to take a bit of a hit, and that's for $1,150. Give you a description of to account for trade, oops, of, no, I should say for, pardon me, for trade in of equipment. And that's your transaction. Okay, guys, so hopefully where some of the numbers come from starts to make a little more sense. And if you've got any questions, just let me know. Thanks. Bye.